Hi everyone. Thank you for joining us this evening. I can see everyone's starting to come through. So first of all, I just want to apologize. There seems to be a little bit of an issue with the start time of this webinar. It was advertised as starting at 6 p.m., but it is a 6:30 p.m. start for this evening. So I do apologize for people who have been in the waiting room for half an hour. But we do have a lot of content to get through this evening, and I do appreciate you waiting. Just to make sure that you can hear me okay, if you want to just pop into the chat where you're from, that would be a good place to start. And okay, perfect. Hi, Julie from Melbourne. Good to see that you can hear us. Okay. All right, guys, I might just go through a little bit of the uh, details of this evening. So this webinar tonight will be recorded. The recording will be sent out to everybody who has registered. And it will be out sometime tomorrow with any links that are required. So I'll send those through to you. If you do have any questions during the webinar, please just pop those in the chat. At the end of the presentations, we will go through and answer any questions that you have. And that's about it for that. Okay. All right, so I can see some people. All right, so we have John from Tweed Heads. We have someone from Gladstone, Gold Coast, New Zealand. Wow. They're from all over tonight. Regional New South Wales. Welcome, everybody. Okay. And then we've got Perth. Perfect. All right. Excellent. All right, so tonight's webinar, we're going to be looking at taxation changes and new models of service fee collections that are a hot topic at the moment in dentistry and across health in general. Tonight we have Dr. Jeevan Sivalingam, who is a dentist and founder of Jeeve Solutions, joining us. We also have Rihanna Hamid, who leads the strategic and institutional sales at HighCaps, and we have Bhupesh Kafle, who is a partner and tax advisory expert of business services at BDO. My name's Rebecca. I work at Centaur. I'm the head of marketing operations. And I hope that you enjoy tonight's webinar. And for this evening, I'm going to have Bhupesh kick everything off and give you some details from his point of view on the topic. Enjoy, everyone.
Thank you. I'll see how we go with first sharing the screen. So fingers crossed, this all comes through for everyone. There we go. I think that's working, which is great. Look, thanks everyone for coming today and allowing the opportunity to present. I think there's a lot of things happening in the current climate, it's fair to say, with medicos in general, but obviously, we're looking at dental specific today. And the service fees, commission arrangements, they've always been a hot topic, but now with payroll tax in particular, potentially prompting it further into the spotlight, it's certainly not an item we have been paying much more attention to, or potentially it's popping up even more, let's say, in terms of discussions we're having with clients. So it's a great opportunity to have a look at what is the state of play currently in terms of where things have progressed to. Give a bit of an update as to how we got here. As I said before, invariably, payroll tax is a very hot button issue at the current point in time, and it does impact some of the things we're looking at today, absolutely. And there is a flavour of things changing. I'll give you a bit of an update as to what we're seeing in terms of the current climate, and also, do we have a best practice solution, or what are the general commentary what we've sort of seen come through some of those discussions to date. So a bit of a journey, I guess, in terms of how we're landing here, and certainly some thoughts in my end as well as to what might be coming through. Look, how did we get here? Look, in the last 15 so years, we've had service facility agreements and commissions and contractors really come to the fore in terms of a hot topic of discussion. And this has been common, not just in dental, it's been common really in GP land, in specialist land, and really medicos generally, including allied health. For today, this is a quick recap in terms of referring to the commission model. This is where we were looking at a contract of service between a practice and the clinician. So this more traditional model we used to see, again, maybe 10 or so years ago, where an invoice was given from the clinician to the practice for 40% net billings. That percentage obviously changing depending on the agreement with that clinician. And GST was charged on that service. Again, I said probably 10 or 15 years ago, there was a move for service facility agreements in dental in particular to be more of a common arrangement. And that mirrored probably what we're seeing already in general practitioner world. That was a very common way that practitioners and clinicians engage with practices. So it was very much a shift to what others were doing in that space. And it was a shifty arrangement. It really looked at the arrangement in reverse. It was very much the practice providing the services and facilities and those services that came with that facility to the clinician themselves and to the dentist. So that meant there was a change in how invoicing occurred. So in this instance, the practice was actually doing invoicing for the services and facilities. And in this instance, it was normally 60% net billings, again, subject to the agreement. And GST was charged on those services. So you can see the reversal there in terms of that arrangement. And just for completeness, not lost in here is employment agreements. I think we've been very much focused on those first two items because they're the things that we're seeing exposed to and some I guess again commentary around. But employment agreements have been there all throughout, and that is another common way that we've seen arrangements with clinicians across the board, and that's going to continue, no doubt, as we look at so those various arrangements that are available. That's sort of what we've seen in particular. So if we look at particularly now the commission model and the SFA model, the end position from a practice perspective is the same, profit-wise. But what we're disclosing from a record-keeping perspective and invariably an income perspective from a legal and accounting sense is different. So you can see in the commission model, it's very much patient fees being derived by the practice and a commission payment out to the clinician. And we're flipping that arrangement to have a facility fee income, the net amount, being actually recognised as income from a SFA side. So that's the real, I guess, accounting differential that we're seeing in the numbers as they play out. Importantly, though, that's not the only thing that's important that's happening, or is the difference in terms of commissions and SFAs. There's a raft of other considerations, and that in itself is probably about a 4-day seminar. So I won't bore you with it all today. But there's a lot of things. There's record keeping. There's what are we doing with business activity statements? What are we doing with income tax returns? And pertinent today, what do the flow of funds look like now? How do we actually do the invoicing and record keeping for each of these options as well? There's, of course, employee liabilities. Look, there's various nuances to each contract and arrangement around restraints and retainers. And of course, there's practical differences. What do we actually do at an operational level? And all these things are very nuanced and different. Now, of course, the one in bold, because it is absolutely on the top of everyone's mind now, is there is also payroll tax considerations. And there has been some differences in whether it's commission, SFA, and employment of how payroll tax is considered as well. So you can see, yes, there's some numbers that come through differently in these models, but there's a raft of other considerations that need to be considered. Now, the payroll tax piece, given this is what is absolutely on the top of everyone's mind, what does that mean? Where are we up to now? So taking a step back, how do we get to a position where payroll tax has really become a forefront in terms of this issue? Well, it really started maybe 2 years ago, I would say, in earnest, when there were some various cases that came through, and Thomas and NAS was the key one that started this conversation around payroll tax and how it's impacting service facility arrangements. There's details listed there as a bit of a summary, but the key thing that came through that was different, or at least in contrast to what we'd seen before as accepted from the state regulators, was that even under a service facility arrangement, when the flow of funds was such that the practice was collecting the funds, the patient fees, even if they were not using it as their own, and they were doing the appropriate reconciliations and paying a net amount out to the clinician, so the GPs in this instance, even in that scenario, it was deemed in some of the comments made that would be attracting payroll tax, or was going to be at risk of attracting payroll tax. And a statement was made in that case where the Medicare payments that were going directly to the doctors were being the flow of funds were following that way, so not going to the practice. In that instance, payroll tax was not deemed to apply, and so it really did put the flow of funds into the spotlight with regards to payroll tax. There were a raft of other things that were quite important in that ruling, and to be clear, that service facility agreement that was looked at had some pretty challenging concepts and clauses in there around what maybe a best practice agreement would be. But nonetheless, there was it was clear there was commentary around the flow of funds, which ultimately was what sparked the discussions that we've had from then. What does that mean as a practice owner? Well, it's meant that the service facility arrangements and agreements, that had previously been accepted and the case law around there was a shift. The flow of funds had shifted in terms of or how the flow of funds was impacting the view of whether payroll tax applied or not was certainly under scrutiny. And the default position, and again, there's a raft of considerations, but this is one of them that's been clearly highlighted by the various state regulators from here, was when the flow of funds is such that the patient fees go into the practice's bank account, well, that is at high risk of being captured for payroll tax. And that's a big number. That is, anywhere between 4.75 to 5.5% across the various states and jurisdictions. There's thresholds and whatnot of how you calculate this. But as a rule of thumb, once you're over the threshold for that state, it's about 5% of that potential cost. And that cost now potentially includes your payments or the net amounts that were being calculated post-service fee to your clinicians. And that obviously ramps up very quickly when we look at some of the amounts being paid to those clinicians. So did it change everything in terms of those clauses? Not necessarily, but it certainly put the flow of funds in the spotlight. And that's really where things have started to progress from there. Now, as a quick state of play from a payroll tax perspective, it's changing. So I say this slide here was current as end of March, but it's probably current as of 45 minutes ago when Melbourne announced there was a change to GPs. So when I say it's ever changing, it was a nice a real life example in terms of how quick this is moving. You can see it's very different in terms of how this is being applied across the medicos, for GPs and for dentists. And to be honest, the amnesty for GPs or the rules around the GPs is really currently just for GPs, for general practitioners and medical centres. So dentists, specialists, other allied, they're sort of grouped together in another boat. And you can see each state's slightly different. So it's really important when you're looking at this and how this might impact you as a practice owner to consider your state, consider your situation at a owner level when it's very specific to you, and apply them accordingly. But really, from a dental perspective, it's relatively bleak. Currently, there is no amnesty for any state outside of South Australia, and it's only till 30 June 2024. And again, there's some rules around what does that mean. So broadly speaking, if payroll tax is deemed to apply, you're on the hook. That's essentially what the conversation is currently with the state regulators. Now, again, much to come through, I think, still with that, but that's the state of play as it stands now. So what's changed in practical terms? Now, here's an example as to what a service facility structure flow of funds might look like now. Now, there's different versions of this that might apply. Again, part of the discussion today is how might this look like with different software applications and terminals. I think that will also give some real life examples as to what that might mean. But the key difference here is we've got patient fees now being received directly to a clinician, to their bank account, not the practice's bank account. So that is independent of the practice. So practice can't control that bank account. It is absolutely independent of the practice. That's really, really critical. That's an unambiguous point that's been made clear in the various rulings that have come through. That's a big change. That is a big change operationally and from a record-keeping perspective. So we no longer have the luxury of those flow of funds, at least in the rulings that have been presented, being accepted as best practice when it's directly to the practice's bank account. So we've got an extra step, and it might just be one step, but it is, as you start to work through the administrative requirements and the practical requirements, it does become potentially quite challenging if we don't have the right processes and systems in place. So what we're seeing now is patient fees being received directly to clinician. There is then an invoice raised, which is then starting the process of the service fee being paid from the clinician to the practice's bank account. And then the practice has its own process as to what it does. to ultimately pay, profits, supplies, payroll, rent. So that's the flow of funds that we're starting to see. But it's nuanced. As I said before, it's an extra step, but it adds complexity. So how is it that we then have those patient fees going to clinicians? What are our terminals doing? How are we looking at the provider numbers? What's the control options we have? As I said, I think, it's unambiguous in terms of there can't be control by the practice. So how do we then see access? Or can we see access in terms of read-only to different bank accounts? That's things that we have to work through. And then we get to some more nuanced arrangements. What about payment plans that you might have with dental care? How are they going to be worked through? How do you do the reconciliation process? You might have retainer arrangements with your clinicians. What's the process there? For every larger treatments have deposits. If we think about clear aligner treatments or ortho treatments or even large full mouth rehab, very different to what we might do with more of the general dentistry work we're doing. Refunds, of course. What happens with errors? So a simple change, maybe in terms of steps in terms of what a slide we're presenting, but all the considerations that come off the back of it, they're quite complex. And it's not just a change of flow of funds. Ultimately, that's going to work to have a operational shift as well from a best practice perspective. So it does bring forward a raft of considerations that previously practices weren't necessarily needing to deal with, or at least not needing to deal with in the level that is now being potentially forced upon them. So what's best practice? And I feel like every time I say it's a bit of a cop-out, but I promise you I'm not trying to be a bit grey in this commentary. It depends. That is the best way I can put this. Maybe a bit of a recap of what practices are doing now, to the extent that they are concerned about the payroll tax piece. Noting that this is not just a payroll tax issue, as we've seen with the operational changes that might be coming through. Some practices are leaving the arrangements as are, looking at payroll taxes as something they're happy to pay. Others are looking at their agreements. Others are actually saying, well, from a commercial perspective, this might be a really good chance to look at how we do things. Maybe this is not just a conversation about tax, because you can't do things just for tax. You can't change just for tax. Maybe this is a chance to actually review everything. Can we get more efficient? Can we reduce our risk? How can we make this something that we can look at and ultimately improve our practice efficiency and processes to get to a hopefully better position? But it's definitely starting the conversation then about how these processes are going to change. A manual process is probably what most are looking at now. Unsurprisingly, we're looking at things like Jeeve Pay, hard caps to the terminals, the practice management systems are all going to have to be looked at and how they link together. And so we are absolutely seeing some conversation in real time about how it's going to be done. Currently, it's manual, very manual in terms of what is being done. Its process is being put on paper. What's going to be appropriate? What are the discussions we're having with our clinicians? What are the discussions we're having with our practice manager? What are we also comfortable with doing? But we are still looking to see how that comes together in real time. The reason I keep saying it depends is each practice is doing this very differently. And that's because each practice has a very nuanced set of circumstances. So when we start looking at some general thoughts, payroll tax absolutely started this discussion, but we've seen that it's started to grow further than a payroll tax discussion. We're hoping this actually is an opportunity to get more efficient and reduce risk. Having looked after many practices over the number of years, the highest risk area we find in terms of for fraud is that the authentication and reconciliation of patient fees to practice management software and bank accounts. This might be a good opportunity for us to look at what processes can we implement to reduce that risk, whilst getting more efficient with our processes. So yes, payroll tax sparked the discussion. Hopefully this is going through and being a meaningful change for practices to look at, irregardless of payroll tax. But as you're probably getting a sense of in my conversation, this is not a one-off discussion from an accountant or a lawyer. It is holistic. There's no point, I guess, working through this process and having one conversation with a lawyer or an accountant and all the ducks aren't aligned in a row. Ultimately, we get to a position that doesn't make sense. So you need to sort of loop in, as a practice owner, the key stakeholders to see what is the best way forward and what is that you're going to do. And I hinted at this before, I've yet to see one practice mirror another practice in what they're doing. We've probably had 50 plus discussions this financial year around what this means. Not everyone's doing something yet, but no one practice is putting the same process in place. And that again speaks to how nuanced this needs to be and discretionary to each owner. Everyone's got a different way to do things with clinicians. Some people have sliding scales, some people don't. Some people do deposit, some people don't. You've got different types of payment plan providers. So what does that mean in terms of our view from a contract perspective? Unsurprisingly, getting some advice and looking at a process review is really what's coming out of the discussions we're having. Which, whether it's modelling, whether it's discussions with stakeholders, we're very conscious of owners not jumping into making a decision without that holistic view being taken. If anything, that's probably the messaging I'd want to come through in terms of what we're seeing and where things are likely to move through as things move in real time with some of the updates we're getting from the state regulators. So that's a bit of a quick recap. As I said, we could spend 4 hours having a conversation on payroll tax, but in terms of what we're seeing more broadly, that's a bit of a summary there. Appreciate there'll be a few questions that will come through, no doubt, in due course. But for now, I'll throw it over to the guys to talk through that in a bit more detail. And please shoot through some comments in the chat, and I'm more than happy to take them at the end of the presentation.
Thanks, Bhupesh. I'm happy to sort of kick off from there. So I think just to reiterate what Bhupesh said about getting advice, I think that is key. So I'm going to focus on the funds flow, which is obviously a key part of what we've just talked about, and the role that high caps, for example, and I'm going to assume that a number of the candidates here on the call are already using or familiar with high caps as a claiming platform. We are part of NAB, so we were founded inside NAB, not bought, so that sort of gives us that banking lens as well. But yeah, I just want to again reiterate how important that advice is, and really that's a starting point for that collaboration where you want to involve your banker, your key advisors, and look at that bigger picture, because that is consistent with the experience that we are seeing as well, that yes, we're here to support you from a funds flow point of view, but you don't want to just do that in isolation. You need to have that bigger lens as to, are we operating in a way that that matches our intention? And I think that's what really this is all about. So the other thing that's important to note is that we, as high caps or your payment provider, and when I talk about from a banking point of view, again, this is very general conversation, but you can apply that to any bank, you can apply that to any reputable terminal provider. So they will be there to support you with implementation of your advice. And I'll talk specifically about how high caps can do that. But again, it's with that sort of general lens rather than specific, because I think, as Bhupesh, again, just reiterating what he said, every clinic is different. And we're learning that ourselves as we're providing a very generic service, but how that might be applied is very variable depending on your demographic, your structure, your practice operating model, etc. So, even as the leading claim platform for dentists, high caps, firstly, capturing all of your funds flow is key. So, what are the different channels that we have? So we've obviously got our terminal that supports private health insurance claiming. We also do merchant transactions, so Visa, MasterCard, Amex. So having all of that route through that terminal gives you the confidence to be able to say, all right, I'm recording all of those transactions. Now we have, and many of you may be aware of it, if you're not, please do reach out to our website and have a look at what's called a multi-merchant facility, or MMF. So that facility allows practitioners, whereas today they might be paying into their central account, the practice account, and then dispersing the fees afterwards. If you have advice that says we need to move towards a funds flow where each practitioner is getting paid directly, our terminal can support that. So we can support up to 25 different practitioners getting paid from each terminal. And then if you've got more than 25, it just means that you need more than one terminal. And again, there's smart sitting behind that around the integration with the practice software to identify which terminal is required. So from our perspective, we can absolutely support you to be able to pay those funds directly to the practitioners. And then, as we think about the new world and payroll tax, cost pressures, etc., we also have capabilities like being able to surcharge. So again, capturing all of those payments, being able to direct them to those practitioners' accounts, and then having the ability to think about cost management, margins, etc., through the likes of surcharging, which again, they're rules, it's APRA regulated. But if you want to be able to effectively cover your merchant services fees, you can then surcharge the end user or the patient to be able to recover some of that. So that's kind of the broad brush of how we, from a payment platform perspective, can assist you. the bigger picture here is around funds flow and bank account transactional setup through to the practitioners getting paid through the terminal to their individual bank accounts, and that's where your banks will come into the frame. So again, important that you have that advice. You then get the key stakeholders together, which your banker should be one of those, and that may involve you setting up transaction accounts and then looking at what your options are to be able to recover the first you got to calculate, and I'll let sort of Jeevan talk about calculation of service fees, but first you've got to calculate that service fee, and then the question is, how do I recover that? And that's where your bank should be able to provide you with some options, and some might include things like direct debit. And it's important to note that firstly, you want to explore what those options are, and then secondly, understand what's required for those options. For example, you might need to undertake a credit assessment to do, for example, a direct debit, because that is a debt product. It's a credit product. It might sound like something that we use every day, but for the practice, there are actually some implications of that. So now's the time to get that advice, look at what that means from an operational point of view, start to get the people together to work out what does that mean for our practice. And what I would also recommend is that whatever you do, don't jump straight in. Think about either a pilot or just testing with the lead practitioner or somebody to just make sure that we understand how this change will be managed effectively, going from a single practitioner through to the whole organization. It is really important that you manage that change well. Don't underestimate how much of a change this could be, not only from an administrative point of view for the front desk through to the reconciliation, and we're going to talk about tools that are available, but again, you want to manage it well. So get the right people in the room. So like I said, you've got options of generating the invoice and just waiting to get paid by the practitioner. But again, that has its pitfalls. You've got automation tools like direct debit, which allows you a greater level of efficiency to get the service fees. But our goal as HiCaps or NAB is to effectively work in an ecosystem to be able to deliver our practices solutions. And I guess a great example of that is our collaboration with Jeevan and Jeeve Pay to come up with greater automation around the service fee calculation, the reconciliation, and everything in between, basically. So how do we do that? And today it might be quite arm's length, but how do we do that going forward in a much more integrated fashion for people who are looking for that burden to be reduced? So it's about efficiency, accuracy, and really minimizing the disruption to your practice. And with that, I'll pass over to Jeevan.
Awesome. Thank you, Vahan. So from my perspective, I mean, I'm here to talk about implementation. So, following the theme of collaboration, obviously it's always important to talk to your legal and accounting representations. But once they give you the advice, the big next step, and as a clinical owner, I'm in this boat, is how to actually implement this. And what we're going to be talking about more is how do we implement a new payment flow? How do we increase efficiency? And as Bhupesh said, how do we reduce risk? So I'll just quickly share my screen. Hopefully everyone can see that. So our background, as a lot of you might know, is as an analytics platform. So we currently work with most of the big PMS, of course, Dental for Windows, who are hosting us tonight. And essentially, we've kind of collaborated with HiCaps and also some of the big accounting and legal firms to kind of come up with a new platform called Jeeve Pay. So as Bhupesh said, the traditional payment flow is the money goes into the practice, those funds get dispersed to a practice's patient fees account, and from there, clinicians get their payments, and the rest of the payments flow to a practice's operating account. Now, with this current flow, there's still plenty of challenges. And, it comes down to, how much financial administration actually occurs in the practice and how many checks and balances are actually occurring. So traditionally what happens is practices will grab the practice management software. They'll input lab bills and patient adjustments into one spreadsheet. They'll have another spreadsheet that they calculate dead and service fees with different formulas, whether it's retainers or sliding scales. They'll push that to accounting software, such as Xero. And then they'll also have to look at the bank transaction data of their own bank account. So things like Medicare, where you have to wait to see confirmation money hidden into your account or direct deposits, and pushing that data back into the PMS. You've got cash books that are, in most practices, A3 or A5 little booklet that people handwrite and potentially forward signatures. And then you have manual high cap statements where you're checking to see whether or not the transactions that's come from the terminal, that you get the little receipts, have they actually gone through? So you check your manual high cap statements, and then you cross check that with your bank transaction data. So in terms of the actual administration auditing process, it's pretty lengthy for clinics right now with the current payment flow. So there's no surprise that because of that, embezzlement and fraud is pretty common in the dental industry. So I'm just going to move this. So, the study said that 40 to 7% of dental clinics will suffer from fraud and embezzlement at some stage, with the average loss of about $50,000. How does fraud occur? It's normally through cash payments, refunds, receptions taken and put in zero payments, or doing balance write-offs. Bank deposits, so when people go to deposit cash, only deposit partial amounts because people aren't checking that whole journey. Obviously, stealing from cash box and petty cash is a pretty easy way to commit fraud. Payroll fraud, so often the managers who have access to everything are also doing payroll for themselves. And personal bills, so who has access to the clinic's credit cards and making the payments. Now they're using those same credit cards to pay off personal bills. The interesting thing with fraud is it's usually committed by your longest serving, most loyal employee. It's very rare that the person who's committing major fraud is like that new person who looks a little bit dodgy, who's got tattoos, and you've got your kind of eyes on. It's normally going to be the person who has most access, and that's normally going to be the one that you trust the most. So how can we prevent that, or how can we reduce those risks? So the one thing is always trying to divide duties between multiple people, not allowing one person to have access to everything. For practice management softwares, best practices are always making sure you've got partial access controls. And for some softwares like Dental for Windows, you've got a little thing called prior period financial logs. It's always surprising that so many clinics don't use those controls. Making sure you have specific rules and procedures when it comes to refunds and balance write-offs. And also with the cash, doing things like blind count, which is really common in retail industry, but in health, we just don't really follow any protocol. We kind of just make it up as we go, and trying to digitize these processes so there's some kind of audit trail. At my particular clinics many years ago, we had these cash books that we'd have people sign signatures to verify the numbers, and what we found is that somebody was just forging other people's signatures. It's so easy when there's no kind of controls or audit ability. So now we'll talk about auditing. So when it comes to auditing, one of the big keys is that the person auditing can't be the person who's potentially committing the fraud, which is so common with clinics where your practice manager is also your bookkeeper and also the receptionist. Auditing your PMS records, to your high caps records, and to your bank records. There's 3 components there, and making sure you're cross-referencing everything. So checking for provider errors, checking for fraudulent activity, and checking for missed payments. Having a mechanism where you track the journey of cash deposits all the way until it hits your bank account. Same with direct deposit payments, and also health fund and Medicare payments. So, for things like Medicare, you really have to make sure the money hits your bank account and then put that information into your PMS to actually calculate service fees. And currently, that's a really, really manual process. And of course, finally, pushing that data to Xero or whatever accounting software you have. So we could try to do this manually, and let's be honest, like most of us are doing this manually currently with our current payment flow. But the risk is, one, is that the person auditing is committing potential embezzlement and fraud issues. Second, the cost, from when I discussed this with clinics, the managers actually spend 5 to 20 hours a week doing this, depending on the size of their clinic. And if you extrapolate that in terms of how much they actually get paid, like that's a very, very large cost of something that can, be automated. Finally, human error. A lot of the people doing this stuff aren't trained bookkeepers or accountants. The other thing I want to talk about is transparency for associates. So, when you look on all these dental forms, DPR, DPO, whichever one it is, all we see is nowadays owners associates like fighting and someone saying, oh, I haven't been paid, or this dispute, or other things. And a big part of that is this lack of transparency. So many clinics I see, the associates just getting paid this number, and they don't know how that number got calculated. They don't know what was being deducted in terms of lab bills or adjustments. And whenever you have a lack of transparency, there's always that risk of conflict. And I think it'd be great if associates had their own portal to view how their pays get calculated. So going back to the traditional payment flow, all these issues exist currently. So all this, lack of efficiency and increased risk currently happens with the current payment flow. But what if you change the new payment flow? So in this scenario, payments go to the clinician, not the practice. So funds go through high caps or direct payments, hits a clinician's patient fees account, and from there, that money gets dispersed into as a service fee to the practice's operating account and to potentially a clinician's personal account. All of these issues suddenly become really magnified. So in this new payment flow, ideally, there should be never funds flowing from practice to clinician. And what some clinics might opt to do is have a bit of a hybrid. So they have some payments on this new payment flow. They'll have some employee dentists on a different payment flow. They might have specialists on a different payment flow. So how do you manage all of this? So with this new payment flow, there might be some good reasons that Bhupesh has talked about, but it poses a number of challenges, okay? Firstly, how do you track payments? Suddenly you don't have visibility over these bank accounts, so you don't actually know when the payments are coming in. How do you audit any of these payments? How do you check for wrong providers? How do you check for fraud? How do you check for investment when you're not the one receiving these payments? Cash flow issues, suddenly are you waiting for somebody else to be giving you money so you can pay your staff? And then, administration time. So, associates pay clinics a service fee to provide services for them, right? And suddenly, are we asking associates to suddenly start doing a lot of the heavy lifting? And is that going to cause conflicts? And is that going to cause, people asking for a different percentage? And that's where Jeeve Pay comes in. So what we do is we grab the practice management data, and as I say, it's been a real collaborative process because we've had basically every PMS, and Dental for Windows was our first one who's kind of jumped on board and said, look, we need to find a solution for our industry. We've also worked with high caps to grab, data directly from them through an API that they've made for us, which has been really, really good. And finally, we get bank data. So what happens is clinicians log on to Jeeve Pay and give us access to their patient fees account as well. So we have data coming into our platform through all the major sources. And what we do with that platform, with our platform, is firstly, we do all the auditing. So we use our algorithms to try and data match all transactions and check for errors. We use that then to make clinician service reports and basically provide a clearinghouse, and then push that data to the accounting software and provide tax and BAS invoices, so tax invoices and BAS statements. So how does it actually work? So without going to a full demo, what we do is firstly, our core element is to create to calculate service fees. So with our integrations with all the major PMSs, we grab all the PMS data, and then we basically input any lab fees or providers or adjustments. So you can see this little screen here that shows an adjustment screen where all that information is put into our platform. From there, we calculate service fees based on whatever your specifications you have, whether it be different commissions, whether it be retainers, whether it be sliding scales. We have specific protocols for dealing with things like cash, deposits, refunds, and payment plans, all the things that Bhupesh kind of mentioned. We've been kind of working through this and working at how we can make things manageable. It's all very well to say, for accountants and lawyers to say, make these changes, but from an owner's perspective, like how do we actually implement this? And we've been kind of working out protocols for how we deal with each of these things. The other thing we do is we digitize Cashbox and petty cash as well, so we can create an audit trail to see how we can, follow that journey of all the cash and record every different transaction. One of the beauties of working with high caps is making sure that if all payments go through high caps, we can follow that trail and we can audit them all. So this is a bit of an example of our adjustment screen where you can see refunds and lab fees being put into our system. And as I say, when you have private demos, we'll explain how we deal with each of these. The second that we have is visibility. So obviously we need to see every single transaction that's coming through into the bank account because we need to be able to input that into the PMS potentially as well. So what we do is we data match everything as much as we can by using all of our sources of truth to reduce manual kind of checking. And that can be exported. We do our best to detect any fraud embezzlement. We provide a clinician portal to allow transparency. And we also automate end-of-day settlement. So you know how every clinic right now, we have those little high caps receipts and FBOS receipts, and we try to match it to the POS and it doesn't work out, then we call somebody. As we get more and more data from high caps, we're going to be automating all of those processes to really streamline your practice. Next thing we do is we do the auditing. So as I say, we've got 3-point data matching. And what we do is we match the PMS reconciliation data with the bank data. And that's, whether or not you use a new payment flow or the old payment flow, we'll do it either way. We match the PMS provider receipts with HiCaps API data, and we match the HiCaps reconciliation with bank data. Here you've got some examples of our little cash calculator. So we try and follow like best practice in retail, which is doing blind counts and working a little calculator for staff to make sure that not stealing cash or having trouble adding things up. And also we're following the journey when cash is received and when the cash is banked and when it actually hits bank accounts as well. So again, it's always about having as many eyes and looking at every single time where payments hit, payments are being received from a patient or a third party. Then what we do, as I say, is we do journal creation to zero, and we automate tax invoices and batch statements. Again, reducing your administration load, and that'll be available for associates to just log in and just download the statements. And finally, compliance and workflow. So, again, this is all about collaborative work, and we've been working pretty closely with, some of the biggest names, obviously with BDO, with other kind of firms, with legal firms, and making sure that what our processes do, we kind of capture, do it in collaboration to make sure we're doing this in best practice, and also so that those, say, lawyers who draft your SFAs know what the workflow is like and kind of work collaboratively with all the professionals in our industry. We also we take workflow really seriously. So in terms of direct debits and things like that, that's something to really discuss with us. So obviously we work really close with HiCaps and NAB about how direct debits can work to make sure that clinics are having the cash flow maintained. Finally, in terms of compliance, we're making sure that our workflow as well, make sure that all funds hit dentist-owned accounts before payments are made to practices. So that's a really, really quick overview. Obviously, we've been doing a lot of demos with clinics to try and explain our workflow. So if you're interested, just go into our website at jeeve.com.au or send us an email. We're doing a bunch of pilots at the moment, and we'll be happy to kind of do a bit more detailed explanation and look at your specific circumstances. And often what we do is we will actually work with your lawyers or accountants to discuss a specific situation. Okay, I'll hand it back to you, Rebecca.
Thanks, Shivan. So, guys, if you do have any questions, do pop it into the chat. We've had a few come through, which I'll ask while we wait for any further questions to come through.
Rebecca,
So,
while you
oh,
do that,
yes.
can I just add one thing? So if anyone on the call who is a HiCaps user wants to set up a multi-merchant facility, so in other words, they are ready to move from paying into one account to paying the practitioners directly, it is very straightforward. You just go to the HiCaps website, and you can click on the apply now, and there will be an option for setting up the multi-merchant facility. So there is a process that you need to go through. So it will take some time because you have to verify the bank accounts, and there's a process of vetting to make sure that the bank account names and the ABNs all match up with the practitioners. So do your homework first. But yeah, absolutely, that is something that you can do in terms of kicking off online via the HiCaps website. So just wanted to clarify that so that people know that it's something that you can sort of kick off whenever you're ready.
Perfect. Okay, so one of the questions that have come through from Harry is there any risk of payroll tax being applied to the clinician instead of the service facility in this collections model of SFA?
Probably one for me, I dare say.
I think so.
I might just clarify that because that's a broad question. It unsurprisingly is going to come down to the specifics for that circumstance. There can be the risk of a clinician also being caught for payroll tax. Now, I'll probably look at two different ways that might be play out. One is a owner who obviously then is a clinician as well, and one is just from the clinician side of things, which is not a practice owner. From a practice owner and clinician perspective, there are grouping provisions that apply. So depending on how your flow of funds, your workflow, your contracts are drafted, it might be that the regulator in your state looks at your whole group, including your personal billings or deemed wages, and looks at what the payroll tax is applicable there. To the extent payroll tax applies, right? So in terms of that calculation. So broadly, yes, there could be a risk there. And I think the more, part of that conversation is that broader piece around are you grouped and what are the provisions that apply to get you grouped. The second part then is from a clinician perspective, and this is probably more so for specialists that I would flag this, given where the numbers are likely to land based on the thresholds of when payroll tax is applicable. If you are ultimately receiving patient fees and then the wages or the way that you compensate yourself then is deemed to be in the payroll tax realm of being caught as taxable wages. Again, lots of nuance there as to what gets in that provision. If you breach those thresholds, then yes, there is also potentially from a sole practitioner perspective, a clinician perspective, to be caught. Again, the big caveats there are, firstly, what's your arrangement? Are they first even caught by payroll tax provisions? If so, what are the grouping provisions to see what the holistic number is? And then you work through the process then accordingly as to how it applies. So I appreciate a bit of a broad response. It almost comes down to it depends, who would have thought. But I guess the view would be if you move to a non-collection model and the other things that you're doing in line with, I guess, best practice. And again, I'm very conscious of saying if you are making a move, it cannot just be for tax reasons. That's really, really critical. But if those things are aligned, you are hopefully managing that risk to a lower figure. Nothing's foolproof, but it's certainly on the better side of the risk profile.
Perfect. So Stephen's asked to reduce the risk of clinicians failing to pay their faculty fee or facility fee, sorry. Are owners considering holding a bond, for example, 30 to 50,000 that is returned to the end of at the end of the arrangement, or are there other novel methods of reducing risk, like insurance, for example?
Yeah, me again, I think.
Yeah.
Here. It's a really good question. It's playing out in real time. And I will just caveat the fact this is starting to touch on legal components as well. So a little bit this will be anecdotal as to what we're seeing play out. Broadly, yes, a bond is being considered. We've seen agreements where they're looking to be some drafting around that. What's probably the more practical consideration is how is that going to be looked upon by the associates? Because this is still a novel thing that's happening in terms of the implementation, it's as much about the practical way it's playing out with the clinicians from a business and commercial side of things, as well as managing the risk. So yes, potentially. And to the extent that that bond's not in place, we have also seen discussions around insurance being flagged. As to where that's landing, it still needs to play out in terms of best practice and accepted practice, let's say. But those conversations are happening in real time. Again, very conscious to say that's happening with lawyers directly as well. So that's very much an accounting and legal question that needs to be considered.
Yeah, I mean, from my perspective, from an implementation perspective, I think the biggest way to reduce your risk is automation and direct debits. So, when you do your pay cycles frequently, so with our system, you can do it fortnightly and have actually less administration issues with it. And you set up a direct debit system, these kind of things won't really happen, to be honest, in my opinion, because you're basically, as a service fee is calculated, you're basically withdrawing that money with the authority anyway. So, personally, I don't see it being a major risk if you've got the right protocols in place.
I think that's a good point, Jeeve, and that's probably the piece we talk about efficiency. We've got many practice owners that work on a monthly SFA cycle, and that would put that figure, that potential bond, at a high risk for sure. If you can find a way to truncate that process, have efficiencies, and maybe speak to some of the things, deliver some of the things you flagged there, I agree. The risk profile starts to diminish, and then maybe the number's not $30,000 to $50,000, maybe it's $10,000, and all of a sudden maybe it's more practical to move forward in terms of what the risk profile is. But again, what reduces that is if it's real-time reconciliations. And then you can see what's happening. And ultimately, if there are things that aren't just making sense, we can flag it early. So I think your point's spot on. Part of it will be that conversation piece also with the associates to take them along the journey.
And I think that also speaks to the whole cash flow issues. A lot of people are worried about cash flow. And I think, with this particular change, you can drive that efficiency. You can actually improve the clinic's cash flow, because most of us, we're doing monthly pay runs and we don't access that money until, the money's been split. Whereas now, if you can increase efficiency and automate everything, and you can do that on a fortnightly basis, suddenly clinics get access to cash that they didn't have. So again, I still think there's a really big opportunity for all clinics, no matter what payment flow that they have, to, as Bupesh kept saying, increase your efficiency and reduce your risk.
Yeah. Okay. And another question is, what is the benefit or reason for prior period financial locks?
I feel like, Rebecca, you should be taking this one as part of Centaur.
Unfortunately, I don't know too much about the prior period financial locks and that sort part of the system. But if that's something that we do want to find out some more information about, I can get that from our trading team and pass that on to everybody as well.
So even so, from an accounting perspective, there's some the reasons for that. Did you want to jump in first? I appreciate you nodding. So, or did you want me to take this one?
Me or?
Oh yeah, do you want me to jump in? Because
I'll just say from a PMS perspective, Dental Winners are very, very known for having their prior period financial lock, and essentially it stops people from going back and changing things in time. I'll let Bupesh speak for the reasons why it's useful, but yeah, it's a really big feature of PMSs these days.
Yeah, absolutely. So from our perspective, it reduces error and stops. It reduces the risk of fraud and stops things going astray. So whether it's accounting systems, practice management systems, and really should be both, to be honest, having those financial locks means that any adjustments that are made happen in the period that you're reviewing. And when you do adjustments to prior periods, once you've reconciled them, it means you'll have things that are not reconciled. And then when things aren't reconciled, that's when things can be manipulated and also things can be missed. So when you lock things off, it means that you basically said, we are not dealing with that. It's ticked off, it's done. There's no way you can change that. So it means everything has to then happen in the current period, which is really critical. So you'll see accountants bang on about locking off your financial year. We've said that should be happening with every party software. If you have the ability to go and backdate things, you have the ability to go and make changes that you don't want to be happening in your system, whatever software you're looking at.
Put this way, I work in a lot of corporate groups. I've never seen a single corporate group not have prior financial period locks put into their system.
Yeah. Okay, and I've got at what level does payroll tax kick in New South Wales? I think Bupesh, you did cover some of those dates.
I did. So it kicks in at a number of 1.2 million. So that increased from the prior year. So it's been 1.2 million for a few years now. Previously $900,000, and that was around 30 June 2020, which is relevant to the extent as a prior period audit, which can be up to 4 to 5 years. But in terms of New South Wales, currently the figure is 1.2 million. So to be very clear, that number is not just for wages, it's what's deemed to be wages, taxable wages for payroll tax purposes. So you need to think about superannuation, wages, what contractors or dentists or clinicians, in instance, are brought into it. There's other things that also get caught into what is taxable wages. So just to, maybe a word of consideration, wages extends to just not what you're paying in terms of salary wages straight to your staff.
Perfect. So I guess that kind of covers the next question to a degree, is does this apply to single clinician clinics in New South Wales?
It does. It does.
Yeah.
The key thing will be what is the threshold? So
Yep.
absolutely, from a whether it's one clinic, two clinics, one chair, two chairs, it's irrelevant. What the most relevant thing here is what's the threshold, and are you breaching it? If you are caught within those parallel patch provisions, if you are in those thresholds and exceeding them, you're into discussions around what happens with payments and calculating parallel things.
Perfect. Dr. Jeevan, this might be for you, just around financial locks again. Just because I'm not familiar with them, I do apologize. I should have had one of our trainers here. But with financial locks, are they based on financial year, or are they supposed to be used on any financial records in the past? For example, the last week. How do you use them in your practice at the moment?
No, I mean, so essentially it's a financial year period, right? So you lock that financial year period.
Yeah.
I mean, to be honest, like Centaur have a great little explainer on your website. I don't
Yeah.
know. I read it like only like a month or two ago because I had to
Yeah.
explain to somebody else. So like, yeah, I'd probably say, it would be good thing to talk to your accountant about it, and also just jump onto Centaur and the thing, because there's a really good explainer on it.
Yeah, at the very
Perfect.
least, I'd say from financial year, definitely lock it off every financial year. I mean, there's an argument to do it more frequently, but I think for practices normally that doesn't make commercial sense because of, I appreciate there is some back and forth from pay to pay, so for lack of a better term. But at the very least, every financial year, you want to lock that off once your adjustments are complete.
Perfect. What I'll do is Stephen, I will, Stephen's the person who was asking about the locks. I will find the support article. I think that Dr. Jeevan, I think that's where you'll get you found that information, and I'll include that in our follow-up EDM for this webinar. So you'll get the recording and you'll get some information about those locks as well. Okay. And the last question, no name on this one, but so what happens if you don't have a PMS that's integrated with Jeeve?
Well, obviously on this one, I would say that everyone should be with D4W, but no. I mean, our coverage is pretty big, to be honest. I think
Yeah.
with our agreements, we cover 90% of clinics in Australia. If you don't have a clinic, I mean, feel free to reach out to us, but we work with all the majors, and yeah, our coverage is pretty big.
Yeah. Yeah, no, that makes sense.
And
All
with
right,
high
go.
caps, I mean, they're 95% of the industry as well, so we have access to the high cap
Correct.
data for a very large part of the industry.
Yeah. All right, guys. Well, that is the end of the questions that have come through. If there are any additional follow-up questions that you think of after the webinar, or you're watching a recording of this and you would like to find out more, there will be links in the email that we send out on how you can get in touch with Dr. Jeevan, how you can find out more about Jeeve Pay, or if you want to get in touch with Centaur to find out some questions on how to do things in dental windows. We'll leave some contact information in that EDM that we're going to send out with the recording. But I'd like to thank Dr. Jeevan, Rihan, and Bhupesh for your time this evening. I do realize there are a few events going on tonight, so we appreciate your time, and we look forward to seeing you at our next event shortly.
Thanks, Rebecca. Thanks, everyone, for joining.
Thank you. Thank you very much.
Thank you. Have a good night, everybody.
Cheers.
Good night.